Okay. Yeah, absolutely. So just so I get, so you are transitioning out of the military and you are trying to start a bookkeeping business and you found a concrete company. Does that sound right? Do I have that right? A- And they want you to do a cleanup for bookkeeping. What, all of 2022? 2020, 2021, and 2022 for the cleanup. Have they used QuickBooks Online? Okay, so they've not used QuickBooks Online in the past, but you just signed them up, and it sounds like they're kind of like bouncing back and forth between checking accounts. Like they might have used one account in 2020, but maybe switched to a different account in 2021 or 2022. Do they have any credit cards? Yeah, if they do have credit cards, they can connect it to QuickBooks just like you connect the checking account. So whenever you connected their checking account to the bank feed, how much data pulled into the bank feed? Because every bank is different. Some banks only do 90 days, some banks do 6 months, some banks do 2 years. May 2022, that's good. So it went back probably like 15 months. Okay. So did you already quote them, or are you hoping to find out how to quote them and how to even approach this project? Yeah, for sure. So to in order to do this project, you're going to want to do it chronologically. That would make the most sense to me. So I would start with 2020. And you can even explain to the client, hey, we're going to get you all done for 2020. You can file your taxes. 2020 is all good. And then once 2020 is all good, then we move on to 2021, bookkeeping, taxes, all done. And kind of explain it to them like that. That's good for them because it kind of simplifies things and makes it kind of more easy to like wrap your head around, okay, like what's really getting done. But then also for you, that enables you to just take it 1 year at a time, and you can bill them 1 year at a time. That way you're not quoting them like for the entire project. And also you can quote them for the first year. So quote them for 2020 and then keep track of your hours, kind of gauge the complexity and the difficulty of the project. And that way you can readjust your quote for 2021. Like if you quote them just, for example, let's say $3,000 for 2020, and then you're like, wow, like that was easy. That was a no brainer. Like that, I could do that in my sleep. Then cool. Like you're good. Maybe charge them $3,000 again for the next month. But on the other side, if you're like, wow, that was way more work than I thought, like there was a million questions and a million bank statements we had to track down, and it just took way longer than I thought, then at least you didn't quote them for all 3 years in the beginning. You just quoted them for 2020. So now you can be like, hey, listen, I know 2020 was 3,000, but a couple things came up, so it's going to be 5,000 for 2021. And if they say no, then that's fine. Like just be realistic with your communication and your expectations and your quoting. That way you don't feel like you're getting taken advantage of, and that way there are no surprises for them. So I know that was a long answer, but just to approach this project, start chronologically, just do 1 year at a time. Now, in order to give them a reasonable and accurate quote, you're going to need to see all of their bank statements. So I would just start with 2020. Don't overwhelm yourself or them asking for 3 years of bank statements right in the beginning. Just ask for 2020 bank statements, 2020 credit card statements, 2020 loan statements, like any documents that could be relevant to the finances of the business for 2020. Ask them to either upload it to a Google Drive and share it with you, or just send it to your email. Or if they're not comfortable with doing that over email, say, hey, okay, you can bring it to my office, or you can bring it to my house, or we can meet at Starbucks and you can hand deliver the documents, or you can mail them to me. There's a bunch of different ways they can give you the documents, but you cannot do anything until you get these statements. And there's a couple reasons. Like, first of all, you're not going to be able to do the actual bookkeeping until you get these statements anyway. So you're going to need them like whenever you decide to do the project. So you might as well get them up front. And second of all, you need to see the statements because you need to estimate the size and complexity of the business. And the only way you do that is by combing through and sorting through the individual transactions that they have. So request 2020 bank statements, let them know like, hey, as soon as you send me these bank statements, I'll take a look at them. And then within 24 hours, I'll get you a quote for the entire year of bookkeeping for 2020. So once they send you over the bank statements, you have a couple options. You can glance over them and just kind of loosely judge the number of transactions that they have. Like maybe it's 50, maybe it's 100, maybe it's 200. You can kind of round to the nearest 50, or you can go through and count every single transaction. So once you get a rough estimate for the number of transactions they have, there is a bare minimum. So even if they only have 10 transactions per month, I would set a bare minimum at $200 per month. So no matter what, you should be charging these people at least $2,400 to do an entire year of bookkeeping, no matter what. But if they have more than, let's say, 50 transactions per month, then you need to do some multiplication to figure out how much to quote them. And what I would do if I were you is count up all the transactions and then multiply that by 2. So that is your starting point. So I would multiply that by 2. And then, so let's say they have 200 transactions per month. You're just going to multiply 200 times 2. And so the quote is $400 per month. However, if you are unable to get the transactions exported into an Excel document, like if you only have PDF documents, you're going to need to manually convert those PDFs into Excel so that you can import those Excel statements into QuickBooks so that you can do their bookkeeping. So it's a more complicated process because they don't have the data in their QuickBooks bank feed. So what I would recommend, instead of $2 per transaction, I would charge them at least $3 per transaction. If you're just getting started and you're brand new and this is only like your first or second client, I would probably stick to $3 per transaction and probably just be happy that you have a client and just kind of take it as a learning experience just to guarantee that you get them. And so you have to add up all the transactions. It might take a little bit of time to add up all the transactions, but it'll be worth it whenever they accept the quote, and then you'll be getting paid, $3,000 or $4,000 to do all their bookkeeping just for 1 year. And for payment, you have a couple options. If you trust these people, then you can say, hey, 50% up front, 50% when the project's complete. However, if you don't necessarily trust them a whole lot, and you also see their bank statement. So if you see in their bank statements, like, okay, these guys have $100 ending balance in their bank statement on a monthly basis, I don't think they'll be able to afford a $3,000 payment, then I would probably charge them full price upfront to complete the project. And don't be scared. Don't be afraid to do that. I have done that many times, and a bunch of people have been like, yep, no problem. Here's the money. Let's just get it done as quickly as possible. So at the very least, quote them or require 50% upfront, 50% when the project's complete. However, if you don't feel comfortable doing that, don't be afraid to require 100%, or maybe you could even do 80% upfront and then 20% when the project is complete. The other thing I want to say is make sure you really reiterate, like, hey, are you sure this is your only checking account? Are you sure you don't have any other credit cards? Because what could happen is they would go, oh yeah, that's some other PayPal credit card account, or oh yeah, that's my Amazon credit card account. Let me send you those statements. Be like, hold on, whoa, wait a second. Like, I quoted you on this checking account and that credit card. Now you're throwing me 3 extra credit cards. So whenever you send them your quote, you could even explicitly say, hey, this is the quote to do bookkeeping for this year and for these accounts, these bank accounts and these credit card accounts. Any additional accounts that require bookkeeping, there will be an additional fee for those accounts. Just be very transparent and upfront with your communication. That way you don't find yourself in a very unfortunate situation doing bookkeeping that you didn't. Yeah, so manually importing your transactions, you have a couple different ways to do it. So if you use Adobe, you can actually, sometimes you can convert PDFs to Excel directly through Adobe. Sometimes it works. It depends on the formatting of the PDF. Sometimes it works, sometimes it doesn't work. The other option is to just do it manually line by line by actually entering in the numbers, which probably 50% of the time you can automatically convert the PDF to Excel, and then 50% of the time you have to manually enter the numbers. But yes, there is a format, and you only need 4 columns. You need the date of the transaction, a description of the transaction, and then whether the money was spent or the money was received. So 4 columns: date, description, money spent, money received. Or you could do 3 columns, and you could just do date, description, and then you could do money spent as a negative number or money received as a positive number. So you can do 3 columns or 4 columns. Yeah, so once you have the data in QuickBooks, with the description, you should be able, inside the bank feed, you should be able to sort all of these transactions by the description. And the description should have some type of vendor information. So hopefully you're able to sort these transactions by the description, and then it'll show up like it'll sort it alphabetically. So like all of the Home Depot transactions should ideally be like kind of all in a like in order. So you should be able to select all of the Home Depot transactions, or all of the Walmart transactions, or all of the Sunoco transactions as like, you know, Sunoco car and truck or gas, Walmart job supplies, Home Depot job supplies, Progressive insurance expense. Um, the other option you have is that you can use the search bar in the bank feed, and you can type in Lowe's, or you can type in Dollar General. And so if this particular person has, or McDonald's or Starbucks or wherever they're spending their money, you can find patterns and try to pick out certain vendors or certain descriptions that have like a ton of transactions associated with them and search for them. And then you can select all of those transactions at once, and then just click update in the bank feed, and then just identify the payee, identify the category, and then click add, and then boom, all of those transactions have been recorded, categorized, added to the books. And then if you have any questions, don't guess or don't try to do this quickly. Like, you want to make sure you do a good job. So if you do have any questions, like if there's money coming in that looks unusual, if there are vendors that you can't necessarily identify, if there are checks that you don't know who he paid or what he bought, you can export that information from QuickBooks. So I would, if I were you, categorize everything you can, and then you can export a list of transactions from the QuickBooks bank feed, and then send them over to your client and be like, hey, would you be able to provide a little bit more information regarding these transactions? I'm just wondering, who did you pay? What did you buy? Or if it was money received, you can say, hey, was this income? Was this a loan? Or was this owner's investment? It's really important that you differentiate between loan, owner's investment, and income, because obviously a loan and owner's investment would not be taxed while income is taxed. So you don't want to accidentally categorize a $10,000 bank deposit as income, when in reality he was just putting his own personal money back into the business. So if you ever have any questions about where the money came from, always, always, always ask. Unless I usually have a threshold. Like if there's a $2 transaction, or if there's a $15 transaction, and I just can't quite really figure it out, especially from 2020, I would just maybe not waste a whole lot of time and just say, if this is a $2 transaction at some gas station, like let's just go ahead and assume it's job supplies. It really doesn't matter. I mean, it does matter, but like, are you really going to waste time trying to track down a $2 transaction? So at that point, you have to use your professional judgment and basically decide, like, is this particular transaction really worth asking my client a question? I usually use $50 or $100 as kind of a threshold. It's like anything under 50 that I don't really know, I just try to use my best judgment. But if it's more than 50, I'll export it into an Excel file, email it to the client, and ask for clarification. Yeah, so if they have multiple checking accounts, or even if they have credit cards, anytime, or if they have loan accounts, anytime you are moving money from one account to another account, it's simply a transfer. So you want to have, that's why you need to have all the bank statements for the business. Like if he's moving money from one business checking account to another business checking account, or a savings account, or a money market account, then that would just be a transfer from one account to another. Same thing, paying off a credit card or paying a loan account, that would just be a transfer from his checking account to his loan account, or a transfer from his checking account to his credit card account, unless he's transferring money to his personal account, in which case that would just be a transfer from his checking account to an equity account, which would be owner's pay, or owner's equity, or owner's draw. Okay, so if he has personal expenses, then the only way for you to differentiate between personal and business transactions is you have to tell him, you have to say, hey, this is your business checking account, so I am assuming everything is business unless you tell me otherwise. Like, I have no idea if you went to Dollar General for office supplies, or if you went to Dollar General for toys for your kids. Like, it's impossible for me to know. So if you want me to differentiate any of these transactions as personal transactions, then you are going to need to explicitly tell me. Now, obviously, communicate that message in a friendly, professional manner, but you need to be very clear with him that you are assuming all of these transactions are business unless he explicitly tells you otherwise. And he can do that a couple different ways. You can say, hey, you can print out your bank statements and you can highlight the personal transactions, or you can just send me an email with a list of like, hey, like these were all personal transactions, but one way or another, you are going to need to tell me explicitly which transactions are personal. Or if he's like, hey, every time I went to Walmart, it's always personal. Like, okay, you can work with that information. But if he's like, sometimes I went to Walmart, sometimes it was personal, sometimes it was business, you're gonna be like, okay, you're going to need to tell me which times it was personal and which times it was business. Yeah, so you can categorize owner's pay and personal expenses as the same thing. Like for a single member LLC, there is no difference between me using my business credit card to buy personal stuff from Walmart versus me writing myself a check. Like those both are just owner's pay. They're both equity transactions. They can both be categorized as the same thing. Owner's draw, owner's pay, owner's equity. It doesn't matter. As long as you're not recognizing either of those transactions as a business expense, it doesn't matter. From an accounting perspective, there is no difference between a sole proprietor and an LLC. The only times it gets different is whenever they are a partnership or if they elect to be taxed as an S corporation. Once all of the bookkeeping is done, for him to do his taxes, I would send him his balance sheet and send him his profit and loss and ask him to review it and ask him if everything looks good. So on the balance sheet, you need to look at all the assets, you need to look at all the liabilities, and everything should make sense on that balance sheet. There should be no line items on the balance sheet that you're like, I have no idea what that is. That's not a good thing. So if you have any assets or any liabilities, for any liabilities, there should be a document or a statement to back up the liability. Like if there's a liability, that means there's a credit card or a loan or some type of payable. And so there should be like a loan statement or a loan origination document or a credit card statement to support the line item on the balance sheet for liabilities. And then any asset is going to be a checking account, which you'll have a bank statement. It's going to be a house, which you have a HUD statement for the purchase of it, or it's going to be a truck or a machine or a piece of equipment. And you should have a bill of sale for anything on the balance sheet as an asset. So for him to do his taxes, send him his annual profit and loss, his balance sheet, and ask him to review it. Once everything looks good, then you are all done with your job. Everything is ready for the tax accountant, the CPA, to file taxes. And so you can either invite the CPA to the QuickBooks account and they can take it from there, or just export the balance sheet, the P&L, and the general ledger and send those 3 documents over to the CPA. And with those 3 documents, the CPA should have everything they need to file the taxes.